Hello students, I hope you are enjoying our video. If you want to see more videos like this, please do not forget to like, share and subscribe our channel. Students, now let's have a look at another chapter which is known as contract costing. Concept of contract costing. The term contract refers to the agreement between two parties to carry out the certain work in a specific period of time. A contract is generally related to a large size with high amount of money and perform at site. According to the ICMA, the contract costing is that form of specific order costing which applies where work is undertaken to customers' specific special requirement and each order of long-term duration. Features of contract costing. In contract costing, contracts undertaken is treated as separate cost unit. Under contract costing, separate contract account is prepared for each contract in a books of contractor or contractor to determine profit or loss on each product. Generally, contract costing is related with costing of non-construction work and repair work. Contract costing is done for a long-term contract work, generally for more than one accounting period. Contract costing is done for long-term contract work, generally for more than one accounting period. The major portion of expenses included in the contract costing is direct expenses, that is direct material, direct labor and other direct expenses. The work of contract are executed or performed at site, but contract accounts are prepared in the need office of the contractor. Contract account, contractor's account, work in progress account, etc. must be prepared under contract costing. Similarities between job order and contract cost. Both job and contract cost are based on the specific requirement of customer. Both job and contract costing are terminal, and the basic principle of contract costing are similar to those applied in job costing. Dissimilarities or differences between job order costing and contract costing. Meaning is different, time is different, size and place of work, value of work, payment of price, investment, suitable industry and nature of expenses, then transfer of profit. There are three types. The first one is fixed price contract. The contract that is executed with fixed price which is agreed by the contractor and the contractee is called fixed price contract. Fixed price contract with escalations and de-escalation clauses. Escalation clause is clause of agreement that aims to reduce the risk that is caused due to changes in the price of material, labor and other service. Under this, the contract price is adjusted in accordance with the change in the price of material, labor and other services. And thirdly, cost plus contract. The contract in which the contract price is determined by adding a certain percentage of profit on the cost is known as cost plus contract. The cost plus contract is adapted to overcome with problem of fixing the contract price cost due to the nature of contract, durations of completions of contract, uncertainty of material, change in the price level, new technology, etc. Now let's have a look contract costing procedure. Preparations of contract account. Firstly, preparations of contract account in case of incomplete contract. Under this, there is two concepts. One is work certified. The value of what is work certified? The value of work completed and certified by contractor himself or his engineer and architects is called work certified. As per provision of contract, a fixed percentage of such work certified is paid by contractee to the contractor. Some percentage of work satisfied amount is retained by contractees and is released when contract gets completed. Such retained amount is known as retention money. The work certified includes the proportions of notional profit. Therefore, if the cost of work certified is lower than the value of the work certified, the difference amount is called notional profit. If the amount of cost of work certified is higher than the value of work certified, the differences will be lost. Secondly, work uncertified. On the date of preparation of contract account, there may be some completed but uncertified work. The work of contract which is completed but not certified by the contractee or his engineer is called work uncertified. It is always recorded at the cost price and not on the contract price, so as to avoid any profit element in it. Then second phase, preparations of contract account in the case of near to completion contract. When contract is almost completed, possible to estimate the remaining time of contract and future cost can be estimated is called near to completion contract. In such situation, the profit is not termed as notional profit, rather than it is called estimated profit. And thirdly, preparations of contract accounts in case of complete contract. Some contracts are small and can be completed within a year. In such case, the total contract price is shown on the credit side of the contract account as contractee's account. In this case, if credit is heavy, then balancing figure on the debit side is called profit, and if debit side is heavy, then the balancing figure on the credit side will be called loss. Students, now let's have a look one practical example here. Over here we are given two informations. One is expenditure on contractors, another is other information relating to the contract. In the required, it is asking to prepare the contract account, work in progress account, contractee's account, and balance sheet showing suitable items. So we will extract the information into the contract accounts. The first one would be the contract account. Under contract account, the very first point we can include is in debit side to material purchased. Under material purchase, we have here is 160,000, and to material purchased from other contract, which is material purchase from other contract is 60,000. Another point we can include is to direct labor. Direct labor is here 100,000. Secondly, to plant purchased. Plant purchase is 160,000. Another is to indirect expenses. Indirect expenses is 40,000. Then in the credit side, we can include is by work in progress account. Under work in progress account, we need to calculate here as a work certified For the work certified, we are given here as a point cash received from contractees total is 360,000 and being 75% of work certified. So that means we need to calculate the gross amount for work certified, which is 360 multiplied by 175. We get it here is 480, and cost of work uncertified is 16,000. So work uncertified is 16,000. So altogether work in progress is we get here the 496,000. Another point here is buy material return to store account is material return to store is 1,000. Another is material transfer to other by material transfer to other contract, material transfer to other contract is material transfer to other contract is 3,000. And another is by material in hand is stock at material in hand is 20,000. Another by plant at site, we know that plant at site is value of plant on 31st Asad 2078 is 120,000. Now let's find out the notional profit. So for that we have to add up these two values, 496 plus 1 plus 3 plus 20 plus 120. We get here value as 640, over here as well 640. Let's find out 640 minus 160, 60 minus 100 minus 160 minus 40. So we get value here is 2 notional profit is carried down 120. Brought down this amount is by notional profit brought down is 120, then 120, 120 to profit and loss account and to work in progress account reserve. So we need to find out this value. Let's do some calculation here. We know that working work certified is 480, which is calculated here as it. Then is 480 minus 360, so 120 is work certified is more than 25% and less than 50% of contract price, which is contract price is 1.6 million. So 1/3 of notional profit is transferred to profit and loss account by using formula is notional profit multiplied by 1/3 multiplied by cash received divided by work certified. So we know that notional profit is 120,000, 1/3, and cash received is 360. Work certified is 480,000. Let's make a calculation here. 360 divided by 480, 120,000, 1/3 is 0.75. 120,000 multiplied by 75, 120 multiplied by 75 divided by 3, we get value as 30,000. 30,000 is profit and loss account is 30,000. So out of 120, 90,000 would be transferred to work in progress account. So this one would be work in progress account. Over here in the credit side, by contract account, which is this amount reserve, we put here as 90,000. Then under debit side, contract account is work certified is 480, then work uncertified would be 16,000. Simply just add up these two is 496,000, then 496,000, 496,000, that as a balance carried down. We put the balancing figure here as 496 minus 90, we get value as 406,000. Then this amount is transferred as over here contractee account, and the balance is 360. Over here the contract agreed was 1.6 million, which is 1,600,000, and the cash received from contractee is 360. So 2, that means contract on a contractee account we received by bank account is 360, and 2 balance carried down is 360, total is 360 and 360. This is our contractee account, and as a balance sheet, let's make it balance sheet. Under liabilities and assets, under assets we know that the value of plant and its site is, plant and site was 120,000. Then material, its site is material, stock is material, site is 20,000. Then work in progress is certified is 480, then uncertified is 16,000, altogether is 496,000. Then less reserve, we minus reserve, which is 90,000. Just calculate over here in contractee account, work in progress account. Then we get here is 406,000. Then again less, finally we reduce is cash received. Cash received was cash received is contract is 360,000. So balance amount over here 406 minus 360 is 46,000 over here. And under liabilities, obviously profit and loss account, we got the value here is 30,000 as profit.